Hey folks, it's Clay Seigle from the Vortexa offices in Houston, Texas with our latest oil market intelligence update. Oil supply and demand are in flux this week. We have supply reductions from OPEC Plus and also from the United States, and we have some tentative signs of demand rebound as businesses partially reopen around the world. So how are cargo movements responding to these changes and affecting prices? Let's use the Vortexa intelligence platform to find out. The first question is, how fast are Saudi exports falling? We're coming from very high levels in April, when production surged to 12 million barrels per day and exports hit 9.6 million barrels. Month to date in May, about 120 million barrels have sailed in 18 days, so that's 6.7 million barrels per day. That's down about 30%. It's a significant cutback, but it will take a month or two to fully impact global balances. In the short term, the surge of Saudi oil that sailed in April is still hitting the docks. We've been carefully monitoring the cargoes arriving to Pad 3, which we mentioned last month looked like more than the region would need in light of big refinery run cuts. So who exactly is taking those Saudi cargoes? We see that out of 14 cargoes already discharged this month, 6 of them went to Motiva at Port Neches, and our modeling estimates that all were Arab medium grade. Our intel has confirmed that Marathon, Texas City, took a cargo of Arab heavy. We believe that Sunoco, Netherlands, has taken 2 more cargoes of Arab heavy. Now, the PBF system received 3 Arab medium cargoes, 1 in New Orleans, and 2 sailing from Pad 3 all the way up to Paulsboro in Pad 1. When we look at what's coming next to Pad 3, we see that most of them are heading for the Galveston lightering area, but 2 of them are heading for Loop. Now, key question number 2 is what's happening with US exports? Interestingly, they remained really strong in March and April during the height of the first wave of lockdowns. Now, so far, we've seen 51 million barrels load during 18 days of May. That's 2.83 million barrels on average, month to date. You might think exports would slow since US production has decreased by about 1.5 million barrels per day. However, this is completely offset by a reduction in Pad 3 refinery runs by the same amount, 1.5 million. So the supply available for export on the Gulf Coast has basically been unchanged. It's also possible that strong US exports are just lagging the demand collapse since they're booked quite a few weeks before they set sail. Now, if that's the case, US exports may be lower in later May into June as a smaller number of tankers booked during the lockdown begin to hit the water. Now, we see 1/4 of the May loadings from the US going to China, which is relatively new for recent months. We see that participating terminals that are sending US exports to China are predominantly Loop and also Oxy Ingleside. The key grades that we're seeing load from the US to China are Mars and West Texas Medium, and also some WTI. Now let's look at what's happening with crude floating storage. Lower than our recent high of 170 million barrels worldwide on May 9th, we're now 146, still robust. And regionally, we see about 76 million barrels of that in Asia. That's about half of the global total. And we see elevated volumes in both the North Sea and also in Europe generally. Let's drill down to the Gulf of Mexico, where we've seen about 8 to 9 million barrels total, the highest in about a year. And especially interesting is we've seen about 2 million barrels accumulate here for more than 30 days. That's pretty unprecedented in recent times. We should also take a look at the levels of gasoline floating storage that we're seeing in Vortexa. Currently, we're showing about 41 million barrels in storage, and that's off of the recent peak that we saw around 48 million barrels over the last week or so. So you see that this curve starting to come down. It's still 41 million barrels though, of gasoline, various grades, and storage. Now, it's interesting to see who's loading these barrels for floating storage. It turns out that the ports in ARA and in the United States account for nearly half of the gasoline that's now in floating storage. When it comes to the grades in storage between the peak and now, we've seen no major change. So it looks like the grades are probably drawing down from storage proportionally. Now, as these supply-demand changes take place, the key themes to watch are price volatility and cargo optionality. What's interesting is that at the same time, many Western markets are reopening for business. One province in northeastern China has just reinstated a virus lockdown. So in the physical oil market, we're expecting to see continued volatility in regional supply-demand conditions that could offer unique arbitrage opportunities to the participants that have nimble logistical capabilities and first mover advantage. If Vortexa's real-time cargo intelligence can benefit your trading book, asset operations, or marketing program, please give us a call. Till next time, I'm Clay Seigle.